All right, let's go ahead and start off with the bigger picture as always, as we always do on the weekend newsletters. All right, so bigger picture. You know, I feel like I've been kind of saying this, and I always do. It's very important to understand that bigger picture because if we can understand that bigger picture, we understand every single time frame, which it's the 4 hour, the 1 hour, 15 minutes. It helps us with direction much easier. All right, and what's going on in our bigger picture? Well, if we take a couple steps back, we're not gonna go that far back, but we're looking at this area right here, 7018 into 7077. This is our home base. Now, back in early April, bulls triggered a bigger breakout out of this much bigger range. Okay, the bigger range is from, we were trading from 6786 into this upper part. Okay, and the market reclaimed 6525. You know what? This is what we're gonna do, because I want us to all be fully aware of this. Okay, as we know, wow, this is what we're gonna do right there. The markets, from a weekly time frame perspective, was trading from 70.43 down into 65.25. Now, what we saw in late March was sellers broke down this range. They triggered a breakdown. And guess what happened? Bulls stepped in and reclaimed back inside of this range, signifying a failed breakdown. Recapturing the lower end of this weekly range, we did a full U-turn back into the upper end of the weekly time frame range. Okay, and that's why I'm talking about this area up here. When we got to this area, we didn't just stop. Bulls triggered a breakout out of it. And this was back in early April. Okay, and since then, all the market has been doing is trending, nothing to do. Okay, you just play the continuation game until we have a failed breakout to go higher. And guess what we got last week? And guess what we talked about last week? Assessing the downside. Okay, it played out beautifully. So, and go back to last week's newsletter, check it out. Okay, the 4 hour gave us such a important range, and this helps us. Using the smaller time frames helps us to stay one step ahead of the market, and that's literally all we need. We don't need to be 5, 50, 100. We don't care what the market's gonna do next month, next year, next week. No, we care about the next session, the session right now, and when that's over, we worry about the next one. Okay, and last week, okay, we talked about that important 4 hour range, and that was 75.40 down into 73.54. It gives a huge important range. And what happened the past week and a half is bulls, from immediately set up a breakout out of this range. Okay, you see right here. And on smaller time frames, we were consolidating in that upper part. And what we want to see on a breakout is, we establish a value through consolidation, and then we follow through higher. Okay, and since bulls control this market, they have the upper hand. Okay, they broke out, they established value, but what happened last Friday is that bulls failed to maintain the value outside of this 4-hour range. And failure of maintaining value here triggered a failed breakout. So the market failed to hold, sunk under 75.40, and made a full round trip back into the lower end at 73.54. Okay, so this is what our bigger picture is looking like into this week. Okay, so first of all, we had a failed breakout, which we haven't had one like that in, like I said, back in April, all the market broke above this upper area of the market, established value, and has been trending higher. We had a little pullback and trended higher, and we attempted to break out. We did, but the market failed to maintain, and this failure to hold above 75.40 sent the market on a full round trip back into the lower end. So what I'm going to be covering in this newsletter is this range now is going to be updated to this. Okay, this is what our range is going to be looking like into this week. 73. Okay, take this away. From failure to hold above, well, look, this is still a very important level. Okay, it's a breakdown level. It's a level that bulls failed to maintain above. Okay, I'll get into it. Okay, but from failure to hold above 75.40, the market made a full round trip back into the lower end. All right, it's a big pivot area. Now, what we're watching two main scenarios I'm going to be working with into this week. I'm going to be going over, okay, in this newsletter. Okay, but the first one is, can bulls maintain value above 73.54? In doing so, we are looking for a bigger consolidation move in between 73.54 and 76.32. So we can hold this lower end. The market's finally entering a bigger consolidation state from this breakout area. Okay, remember, the market does two things, that is trend and consolidate. We finally got the trending move here. We got a breakout. So we've been trending. Okay, trend. We failed to hold that immediate trend, and from that failure at 75.40, it put the market in a potential bigger consolidation state. And that range that we're going to be watching is this one. Can we maintain value inside of here? If so, we're watching for a consolidation move. Now, if we fell at 73.54, it's not a good sign to see, but failure of 73.54, the bigger risk is that this can lead us to a retest at our home base, where bulls really stepped in at back in April. Okay, and we pull up the weekly chart. This is where the market broke out from. Okay, finally got a red week. So very big pivot area here at 73.54. If bulls cannot step in and defend and maintain value above 73.54, this starts to open up lower levels down here. And on our bigger picture, all it is a retest of the bigger breakout area. And that would be an absolute gift for the summer. All right, so that's what I'm going to be getting into on this newsletter. So let's go ahead and get into it.